Good morning, everybody. It's Quinn coming at you live, Middle of the Earth podcast. We are Zero Attitude from Zero Latitude. Hope everybody's having a good day today. It is, let's take a look. It's Tuesday, 10:30 on Eastern Standards. Yeah, we're at East Coast now. Back from LA. Having a pretty good day, guys. I wanted to do a little bit of crypto news with you this morning. I got a couple things I wanted to check in on. Nothing too major going on. Price action still chopping right around the 8,000 mark, 8,200, 7,900. The longer it stays there, it really depends on the amount of volume we're getting, and I haven't actually kept my eye on it just because I'm not in any active trades right now. Personally, I just haven't been. I don't trade at these points of uncertainty. It's for me. I'm not what I consider myself a real strong trader yet. I definitely need to up my game, get the classes going more. But with that being said, whoa, look at this, 125x. I just saw that open up. Hadn't seen that before. With that being said, I think my mentality of slow trade, I'll do 2 or 3 trades a month, maybe. And that's just kind of my way of saving myself from over trading. In the past, that's what I kind of saw was my errors. Cause I can get my setups correct. And then once I'm in them, I tend to want to do it too much. I'll, take profit and then try to catch the short on the way down and rebound on the long, and then I'll end up losing some either way, when I would have just been all along better off sitting back and letting my one original trade play out to fruition. So that's kind of where I'm at. Price is chopping around 82 though. It's kind of, I don't know. It looks like we could. It's like I always go the opposite whatever Twitter sentiment is, and for some reason right now everybody feels like we're getting ready to pull back online. So maybe we're going to just bust up to 9K. That's probably what will happen. I wanted today's talk to be about just a little bit of coindesk update. I saw one thing that kind of caught my eye. It was basically coindesk calling attention to the local Bitcoin data flaws. Now I haven't got a chance to read it all yet, so I was just going to do it on stream with you guys. But the idea is that the data might not be as correct or valid as we all hope and think. Look at eToro with their advertisements everywhere now, huh? They were really present at the last conference at CIS. I mean, they were all over. So good for eToro, I guess, getting into the space. But, Anyway, so when Bitcoin advocates claim adoption is surging in developing countries, particularly during periods of political unrest or economic turmoil, their go-to source for evidence is often local Bitcoins. The peer-to-peer exchange, which matches buyers and sellers of the largest cryptocurrency in nearly 250 countries, publishes weekly volume data for each nation and region where it has users. This constant stream of fresh data makes local Bitcoins a unique window in the global market. Now, okay, we'll read a little bit more and then I'll make some comments. A closer look at the way this data is collected shows substantial noise mixed in with the signals, undermining the claims of growing crypto use and powering the downtrodden. For example, in Hong Kong, local Bitcoin data seems to show increasing volumes, with media reports since August arguing that the protests were boosting crypto adoption. Yet one member of the city's long-standing Bitcoin community, who spoke on the condition of anonymity, told CoinDesk there hasn't been any increase in Bitcoin awareness among protesters, nor a noticeable change in activity among regular local users. So, all right, we'll read through it. Researcher Matt Alborg reported that the volume spike in Hong Kong was actually caused by a single trader making roughly 30 transactions to quietly move a significant, albeit undisclosed amount of Bitcoin. Okay, so that doesn't bother me as much. I mean, the idea that the volume was the volume. Okay, so there's a term, engagement is still engagement, or engagement's engagement. So whether it's a bunch of, I would like to see like a strong middle class exiting with lots and lots of smaller users being the people doing the transactions. But even if it's one large user, that could be an indicator for other high net or high value worth individuals that are thinking similar. They're like, hey, look, I need to get my HKD, or I need to get whatever currency it is that I'm sitting on out of its currency and into something safer. The issue is that I think dollars are still pretty desired. That's what everybody wants to be in. So here, let's keep going now. So elsewhere, conversations with Bitcoin veterans in Iran, Egypt indicated local Bitcoin volume data appeared to have little correlation to local trading activity. It's common for traders to mislabel their offers as coming from another country to avoid having the trades canceled by local Bitcoins. That's true too. I used to do that because some places I was in is not legal. You can't technically legally trade Bitcoin there. So they're saying they acknowledge that it could be miscategorized in regional data, but she says it's possible that some volume variation is driven by a particularly high volume trade or a person or an exceptionally active period for a group of traders. That's a nice way of saying that it could just be one person or a couple people moving a lot of money. Out of more than 4 million registered accounts worldwide, Figaro said the platform had about 500,000 active users in September of 2019. Meanwhile, traction dipped dramatically in October due to renewed focus on enforcing KYC policies. Okay, yep, that makes sense. So let's look to Latin America. Overall volume in Latin America dipped 6% from roughly 9 million the last week to 8.5 million. That's not terrible. So let's go into the good, the bad, and the ugly. That's kind of funny. I just did an article, the good, the bad, and the why. Anyway, so traders in Venezuela told CoinDesk that they believe some of the local Bitcoin volume there comes from government officials looking to get richer, complicating Bitcoin's image as the great leveler. How the hell are they doing that? Such is the opinion of John Biar, a programmer and entrepreneur who used the platform regularly to exchange Bitcoins and pay his employees in Bolivar. He said mining can only give you a certain amount, but to print Bolivars nonstop and then buy Bitcoins can give you much more. That'd be super fucked up. If that's how they know, because they can't get dollars. No one's paying them dollars anymore for their Bolivars. So they're like, look, we'll switch over to Bitcoin. Bitcoin's got even a safe, we can move it easier than we can all these dollars. Oh, that makes sense. I bet that's what they're doing. So okay. So that's why you got people going into Venezuela selling Bitcoin at such premiums and happy to do so, even if they're doing it with Bolivar, because they can just go and change that inflated Bolivar onto the street for dollars or do whatever they need to do. That makes sense. Okay, let's see what else is going on. Okay, so government officials use gold as a way to funnel money in and out of the country lately. And lately they've been talking about Bitcoin, but he doesn't think they're using local Bitcoins. That's more for regular people. That makes sense, but still. Part of the October drop-off in volume may also be related to users switching back to dollars as they become more accessible. Okay, so Venezuelans prefer to store value in Bitcoin. Said few Venezuelans prefer to store. Yeah, so most people would prefer dollars over Bitcoin. That's what that says. Well, that's about what we thought. What can I say about that? I guess, yeah, so I never reported any of my local Bitcoin transactions when I would make contacts in other countries. All I do is I make contact with the person. Usually I try to figure out a way to exchange my phone number with them or exchange my details with them so I can communicate with them through my own venue and make sure I feel comfortable with the trade. If you are going to do P2P cash transactions, I just always, recommend being smart. I do them in airports where I'm saying like an airport is safe. Nobody can mug you at an airport, easily. It's going to be hard. They got to go through security. Now, maybe you don't have the luxury of meeting within security, but you can definitely meet within the airport and it's a lot safer there. Even your bank. I mean, you're not doing anything illegal. So that's you can just meet in a safe place, be smart. If it's a large transaction, maybe don't do a large transaction with someone you've never met before, do smaller transactions until you find, people you're comfortable in, locations you're comfortable with, and then you can kind of ease your way into those larger transactions if that's something that you need to be doing. But again, always, think about the optics and try to just be smart in the situation. So that's another big one. Get that out of the way. What else? I also want to talk about this. This is pretty exciting, man, and not a lot of people are talking about it. I guess Pomp is talking about it a little bit. I got to interact. I can get to interact with him. I got to find out who this gentleman was through a poker game on TronBet about 6 months ago, I think. They had like a charity, Binance poker game, and he was one of the players that came on and played. I think back then I didn't really know how involved he was in the cryptocurrency space or in just blockchain technology in general. I just thought he was trying to do promotional work for this online, blockchain casino. So turns out that this guy, first of all, he's really intelligent with the way it's not just like some half-assed. I mean, he's gone levels to it. He's locked up. So let's go into this. All right. Dinwiddie is his name, Spencer Dinwiddie, and think of him as a, I guess, semi-serial entrepreneur who's also an NBA basketball player. As an NBA basketball player, he's got a hefty contract that pays around, I think it's $12.5 million is what he's currently worth. But he's got an upward trajectory. This guy is talented. He's growing in his numbers, all positive signs that his next contract will be worth increase in value. So, and there's precedent. He's going and he's looking to, David Bowie sold Bowie bonds that paid investors a fixed annual return of 7.9% over 10 years for bonds that were backed by his intellectual property, i.e. his recordings and songs. Think about the same concept being applied to Dinwiddie's intellectual property being his talent, his basketball skills, and his contract, his $12.5 million guaranteed contract of 2020-21 season. That's the guarantee money. Now, that's not just that though. So I thought it was, and I was like, okay, how does this work? Are you just buying a piece of that future contract with the hopes that you'll make more? It's pretty nice. So what he wants to do, what he's more focused on, is offering up a new asset class, with that asset class being individuals. An individual as a person, as an entity though, Spencer Dinwiddie as a company, not even a company, but as an entity in which you can buy a future stake of their success or failure. And, as an investor, make an educated guess. Now, right now, the only kind of investors he's taking are accredited investors, which, it's got a minimum investment of $150,000, and being an accredited investor in and of itself means that you are a high net worth individual who's done lots of trades, and, you're not new to the game, so you know what you're getting into. So he's created a professional athlete, or he's going to create a professional athlete investment token, and offered up, I think it was 90 tokens. Let's look into this. All right, so it's for the 21-22 season. Excuse me, I thought it was for the 2021 season. It's for the 21-22 season. So it would be a debt issuance to accredited investors that were backed by his earnings in that season. Okay, the product would be issued as a token and would have many characteristics of a typical bond, but it's quite different. You have to be the accredited under Regulation D for the Securities Act investor. They have, what I just said. So, all right, $150,000 is offering a maximum of 90 tokens for purchase that would represent $13.5 million, or around 40% of his 3-year, $34 million contract with the Brooklyn Nets. Let's get into this. So though the information is not public yet, you're essentially going to be loaning $150,000 to him on the front end with a promise that he'll pay you back in 2 years at certain terms and the possibility of larger upside. So the base, non-public information right now is that it'll be a 2.5% annual interest rate. So on a $150,000 investment, you're going to get $3,750 back per year. So $7,500 back for the 2 years on a $150K investment. Now, that's the year 3 is where the bond per se would mature. Okay, and then you can have a lot of different options with his revenue sharing, because you're going to be owning a piece of his post-tax 2021, 2022 basketball related income. You're technically an owner of that share. So this will be done at a 60-40 split, I assume, because he's offering up 40% of his actual salary in the form of $13.5 million in tokens on the front end, so that he could, and this is really crazy. Like, this sounds dumb if it's like some uneducated or not well informed or just money grab. This seems like it's got super levels to it, because he's doing a raise and then leading the way with himself being the guinea pig, in the hopes that he can take the raise money and turn around and like bring everybody with him almost. That's what I'm thinking, at least. That's what it seems like. That's what I'm reading. That's what I'm understanding. He's going to use that raise money to turn around and set up this actual new asset class, with himself being the pilot program almost, and then sponsoring or helping or, because you got to understand a lot of these guys, I can't expect professional basketball players that might have not gone to college or even gone to technical school to understand the blockchain technology side of things when I'm super new to it. And this is what I do all day, every day. I don't have to go spend time in the gym, spend time on the court, spend time flying around the country playing. You know what I'm saying? Like if somebody he is really ahead of the game, and the fact that he's going to look back and I could see him being like a pioneer for some kind of new whole new asset class. I mean, he can go to Bankston, he can go to JP Morgan with a crew and form a semi-union, right? Because he's the pilot and he's going to be like the one that every single basketball player will trust. So all these guys that are seeing him successful and seeing what his program is doing or able to do and how it's led to, because think about this. Here's what here's what you got to understand. If I, as an accredited, Series D, whatever investor have put my money into this individual, I'm now invested in seeing him be successful. So I'm going to fan that fire, and every contact that's in my web that I think might be good for him, well, now it benefits me to help him. And you got to understand, if he's got 90 investors, that make up an investment pool worth $13.5 million and that are standing behind a plan that he's got to create this new asset class, it's in his and all of their best interests that he succeeds. So they're going to do everything that they can do as well to open up gates and help. If the NBA and the regulatory problem is what's the issue, I guarantee you there's going to be some people in that investment pool that have friends and connections in that realm and can make phone calls or can, you know what I'm saying? You're starting to see where it can go with that. All right. So let's go into this a little bit more. So the third year when it matures is when things get interesting, because the idea will be that any income or increase can get paid out to its investors at a 60-40 split. He'll get 60, we as the investors, or us as the investors, get 40. Because he owns a player option for the 21-22 season, there's a great deal of elasticity here. Let's say the 26-year-old guard continues his upward trajectory over the next 2 seasons and opts out of his current deal with the Nets. If this new contract plus additional income pays him a total of $20 million in 21-22 and his taxes-related expenses runs 50% of his income, then you would receive your original principal of $150,000 back plus an additional $52,934. In the end, you would have earned 10% annually over the term of the investment. That's pretty good. So over a 3-year investment, you'd earn $15,000, 10.6%. So 15 and some change $1,000. That's not bad for an accredited investor, somebody who's, now it's not that's 10% is good. It's not like a crazy return for someone who's taking a risk on a new asset class. But it's just, all right, because it could go low. That's everything goes well and, he's able to avoid injuries and things like that and, get a great deal at the end of the 3-year season. This orange juice is so good. Sorry. All right. So why would he do something like this? Well, he raises millions in cash on the front end for his contract that he can now put to work in various investments. Now he says the $13.5 million would be relatively traditional vehicles. You want to be strong with your money. We've all heard the horror stories. The investments are designed to be something that athletes can benefit from. So this is where I assume he's going to go pretty. He's risk tolerant, but I imagine that this investment portfolio or this investment fund will be conservative, at least for the beginning, because, well, I don't know that because he's got $1 million in Bitcoin too, and that's anyway. So here's what we're going to find out. So he says we're going to set aside an amount for venture capital, but it's not like I found a new element or anything like that, which is a really cool concept. He's not like any delusions of grandeur. He doesn't think that he's got some new formula, but if he knows that he can set up a new asset class, that's what I think at least. If he can set this new asset class, he's got a really big step into the future. So if he can achieve a decent rate of return in those investments, he can recoup his debt obligation. More broadly, he can establish himself as an innovator who blended traditional and more cutting-edge market tools to create a new financial product that could become fantasy sports on steroids. If that platform became successful, Dinwiddie's 2019 offering could go down as a historic prototype, and he would have ownership of what could potentially be a profitable venture. That's the thing, man. He could be the leader. He could be the one that really takes it to the next level. It's going to be built on Ethereum's blockchain, which, that's going to be, let's see, is this a risky investment? So the 10-year U.S. Treasury note, arguably the most reliable debt instrument in the world, currently offers a yield of 1.75%. Dinwiddie's offering would pay around 2.5%, marginally more, but it comes with a more credit risk. After all, it is an unproven asset class with an unproven payment mechanism, and novelty by its very nature is uncertain. So, yes, it is risky in the sense that it's a new asset class, but he's not offering like 10%. I mean, he's offering, conservative 2.5%. He's a little bit over. He's 50% over the most conservative investment vehicle out there we have right now. So, not the most conservative, but one of the most conservatives. So, and it just kind of goes into clarifications on what he is and he isn't doing, and the things that the NBA is saying that maybe they believe violate his contract and his ability to do that. So he says, this is a really cool part. He says, is he using the contract as collateral? And no, and that's a very important point. He says he will lock up $1 million in cash, $1 million in gold, $1 million in Bitcoin, with a larger goal of setting aside as much as $9 million in reserves. These holdings aren't exactly risk-free. Bitcoin in particularly is volatile, and he's in conversation with his financial advisors about how they'd place the additional millions. But if Dinwiddie can get to $9 million in escrow and/or reserves, there would be moderate loan coverage in addition to the $12.3 million he's due before taxes in 21-22, which would be considerably greater if he opts and signs a more lucrative deal in free agency. One could argue the token is implicitly backed by the contract, but not explicitly. So yeah, it's an implied, but it's not dependent upon, is what that means, basically. The token, it's given that collateral is there, but it's not explicit because he'll have other collateral secured before that takes place in the form of $1 million in cash, $1 million in gold, $1 million in Bitcoin, and $9 million in some type of investment vehicle that he says will be in escrow. So that kind of loan coverage is $9 million. You're putting up $9 million of your own money to cover a $12.3 million investment vehicle. It shows exposure enough to make sure you want it to succeed just as much as the investors do. So that's what I've got, guys. This is a breakdown by me here chilling with you. I'm not a financial advisor. I don't have my Series 7. I'm not a licensed broker. I've read some books and listened to some podcasts that people smarter than me were talking on. So I suggest you try to do the same, inform yourself, but things like this are pretty exciting, and I do like hearing them in the space, man. If I'm thinking about myself, man, if this were to take place, where's the first place that I would want to go as a cryptocurrency investor with individuals as an asset class? And it's the UFC. You know what I'm saying, man? Like what? Oh, because the UFC has got a plethora of underpaid, undervalued, really talented fighters. And, if you got an investment vehicle that can back some of these guys, especially some of the ones that have real raw talent, and get behind them, because that's what these people need, man. Some of these guys, these fighters are born world champions. They just need a team. They need a trainer, a nutritionist, a lawyer, a tax attorney. You know what I'm saying? Like somebody to help them, to actually like get ready for that life, and and then I think that's where it would go. The UFC for me, that's where I'm thinking about it. But it's going to go everywhere. I mean, it would explode as soon as it's legitimized by one person, especially an NBA player. That's awesome. And then NFL, baseball, everything's on a domino effect after that. So I appreciate everybody being here with me this morning. I'll get this out as soon as I can. As always, lots of love. Zero Attitude from Zero Latitude, Middle of the Earth podcast. Lots of good stuff coming up in the future. Keep an eye out. Peace.